Now, as I mentioned at the beginning of this session, private equity firms aren't just interested in transactions, they're attempting to engineer outcomes. So they're trying to purchase or acquire businesses that are already operating and thinking through the additional capabilities and resources that they can add to those businesses in order to make them more valuable in the future. So if you think about it, private equity gets its biggest bang from its buck from capital appreciation. And so if you're a business owner and you partner with private equity, if you are literally equity partners with a private equity firm, your interests typically are 100% aligned because both you and the private equity firm want to increase the value of the firm. And so private equity typically comes in and does a variety of different things in order to help create growth. For example, private equity firms will come in and focus on corporate governance. A lot of middle market businesses don't have effective boards or corporate governance processes and procedures established. So that's important from a private equity perspective to do that. Additionally, it's very difficult for middle market businesses to access or tap the capital markets, even the debt markets. So by partnering with a private equity fund, middle market businesses now have the ability to tap the debt markets in ways that they can't on their own. And you could take like a typical $50 million residential services business. Now, you might be able to get some senior lending from a bank for a couple of $1 million, but in partnership with a multi-billion-dollar private equity fund, now that business can go out and borrow $5, $10, $25, $30 million, whereas before it couldn't. So private equity provides access to capital. It also provides not only debt capital, but also equity capital. In addition to buyout shops and growth equity investors, which are two broad classifications, there are literally thousands and thousands of private equity funds across the world. It's a $6 trillion global industry now in 2025. And private equity firms come in all sizes and shapes. For example, you have private equity funds that focus on the quick service restaurant industry, consumer products. You've got some that focus solely on residential commercial services. Private equity funds over time have begun to really specialize. Back when I was at American Capital, it was a generalist shop. American Capital would look at anything. I mean, we invested in Piper Aircraft, Case Logic, a toll booth operator, a pneumatic valve manufacturer, Middleby oven manufacturer. Whatever it was, you name it, American Capital would look at it. And American Capital looked at when I was there, they would look at about 4,000 transactions per year. There were 4,000 deals that would come in for us to look at and assess. And we had a pretty stringent process. We had an investment committee that sat at the corporate headquarters. We also had deal committees at each different office. And at the time, American Capital had 10 offices when I was there. But we would roughly look at 4,000 deals per year, whittle it down to about 450 that we would start to do some preliminary due diligence, ultimately submit proposals to the investment committees. And the investment committee would approve somewhere between 1 and 1.5% of those deals. So somewhere between, let's call it 40 and maybe 60 transactions would get done per year out of those 4,000. That's a typical private equity funnel, right? It starts really broad, looking at a lot of transactions, and gets pretty narrow. Now, some private equity funds are more thematic investors, meaning they will either entirely focus on an industry or a vertical, or they will choose 3 or 4 different verticals to focus on. They might have one fund that does a few different sectors, or they might have multiple funds, each fund doing its own sector. There's a variety of ways to do this. But when we talk about thematic investment, that's when a private equity fund develops a thesis. Like, I want to roll up the lawn care industry. It's a $15 billion industry. It's extremely fragmented. There's a lot of tailwinds, so on and so forth. I want to focus on this industry. I want to acquire and consolidate a lot of lawn care businesses. I want to bring in technology, artificial intelligence, bring in new operators, add leverage, change strategies, evolve marketing. There's a variety of different levers private equity will pull to increase the value of the business, but that's an example of a thematic investment. And when private equity funds do that, if you're a business owner out there in a particular industry, you might get a few emails per week. And some of those emails that you get might say, hey, this is Joe Blow from XYZ private equity firm. We are very focused in the pneumatic valve industry, and we're building a thesis around that. Your company seems interesting, so on and so forth. That would be an example of a company or a private equity fund that's really going to focus on pneumatic valves, for example, and attempt to roll out that industry. On the other hand, what American Capital did, it was more opportunistic. So not only did we receive deals from bankers, right? Investment bankers and M&A advisors would send us materials on their sell-side engagements. We were also active in reaching out to business owners. And back in those days, we did the same thing that is happening to you today. We would send out emails, we would make calls, we would try to sit down with business owners and explain to them how partnering with private equity would allow them to get very wealthy. And of course, we had our own douchebag dictionary, just like all the private equity guys today, right? Like second bite of the apple, take some chips off the table, blah, 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 blah. But as a business owner, you face the dilemma in that, how the hell do I tell the difference from one private equity fund to the next? Because they all wear the same vests and drink the same coffee cups and say the same sort of things and same sort of buzzwords. And later in this series, I'm going to walk you through how I would do my own due diligence on a private equity fund. But for today's purpose, I just wanted to spell out how private equity in North America works broadly, which is buyout versus minority or growth investment, and then naturally thematic versus generalist approach. So if private equity has reached out to you, feel free to reach out to me. You can contact me on the contact form below in the description, as well as you can always reach me on LinkedIn. I'm Giannamore. Thanks for joining me today. I'll see you on the next one.